Hi everyone, this is Mateo Garcia, President of Mateo Mortgage Funding. I wanted to take a couple minutes today to discuss interest-only loans. People ask me a lot, hey, I'm inquiring about an interest-only loan, or Mateo, what is an interest-only loan? Well, an interest-only loan is a loan where you're allowed to make interest payments only. On a typical amortized loan or a principal and interest loan, your payments are set up on a payback period where you make a small principal payment and an interest payment with your monthly mortgage payment each month. And as the loan goes on, a little bit more goes towards principal, a little bit less goes towards interest. And let's say, for example, in a 30-year loan, after 30 years go by, that loan is paid off. Well, on an interest-only loan is you only make an interest payment on the loan. You're only making a payment of the interest that's due each month for that particular loan. And the lender allows you to make an interest-only loan usually for a set time period. It can be as short as a 3-year period or as long as a 10-year period. There's a few different types of interest-only loans. There's fixed-rate interest-only loans where the rate of interest is fixed over the life of the loan. And there is also adjustable rate interest-only loans where the rate of interest may be only fixed for a 1-year, 3, 5, 7, 10-year period. And then after that time, the rate adjusts along with the required interest payment that you're required to make. The disadvantages of an interest-only loan is if you never make any extra payments. For example, if you borrow $100,000 and you're only making the required interest payment, at the end of the loan term, you will still owe $100,000. Since lenders know this, typically that's why they only require or only allow you to make interest-only payments for maybe a 5-year or up to a 10-year period of time, because at some point they want you to pay this loan back, including the actual principal balance. Majority of the loans that we work with here are usually some sort of fixed rate mortgage. Right now we're highly recommending fixed rate mortgages to our clients. But in combination of that fixed rate, you can have an interest only period where you are allowed to make interest only payments for a set time period. Our particular interest only loan allows you to make interest-only payments up to 10 years. So what that means is for the first 10 years of the loan, you can make interest payments only. But what will happen is after 10 years, from our previous example, if you borrow a $100,000 loan, and after 10 years you're only making the required interest payments, well, after 10 years you're still going to owe $100,000. So what's going to happen is your lender that's servicing the loan, the person you're making your payments to at that time, they're going to amortize that loan for the remaining 20 years. What that means is they're going to adjust your payment accordingly based on whatever your balance is at that end of that 10 years. So you'll pay off the loan in the remaining 20 years time that is left on the actual loan. So a major disadvantage of an interest-only loan is somebody gets an interest-only loan, never makes any extra payments, and then at the end of the loan term they still owe exactly what you have borrowed. You know, if you've built up a lot of equity in the house, then you're really not going to have a problem. But if you're in an area with declining values or values aren't going up as quickly, an interest-only loan may not be the right loan for your situation. But let's talk about the advantages of an interest-only loan. One of the main advantages is we can assist somebody in qualifying for either more of a home or a larger loan than they would normally be able to qualify for on a principal and interest loan. Because typically an interest-only loan could be anywhere from $100 to a few $100s less than a traditional principal and interest loan, depending on the loan balance and how much that you end up borrowing. Another advantage of an interest-only loan is each month the interest is calculated based off of your current month's balance. So if you really want to pay off your loan quickly, an interest-only loan can be a loan that may be a good loan for you. The reason being is as you make extra payments, the following month your minimum interest payment will actually go down Because your balance on that loan is lower. You're still paying the same interest rate, but you're paying a rate of interest based off of the loan amount for that particular month. So if you borrow $100,000, but you do make some extra payments in the following month, your balance is $99,000, your minimum interest payment will be reduced per month. On a traditional amortized loan, you can pay off the loan sooner, but your monthly payments always remain the same or always remain constant. So you can make an extra $5,000 towards your actual loan payment that particular month, but on an amortized loan or traditional loan, your balance will go down $5,000, but your minimum monthly payment you're required to make is still going to include the principal and interest payment. Comparing that to an interest-only loan, on an interest-only loan, as you pay down your balance, your minimum interest payment goes down as well. So someone who really wants to pay off their loan quickly and get the advantage each month of actually having a little bit lower mortgage payment, an interest-only loan could be a great option. A common myth out there is interest-only loans and adjustable rate loans are the same loan. They're completely different. Adjustable rate loans, once again, is a rate where the rate adjusts, is a mortgage where the rate adjusts. With an interest-only loan, you can get a fixed rate interest-only loan. It's just that your minimum interest payment, you're allowed to make a minimum interest payment with an interest-only loan. I know this was a lot to cover. This may have been a lot of information in a short video here, but I'd be more than happy to discuss your individual situation or see if an interest-only loan would be a good option for you. You can give me a call at my office, area code 480-839-6709, or you can visit us online at 456loan.com. That's the number 456loan.com. I hope you enjoyed this quick video about interest-only loans. If you have any additional questions, feel free to give me a call. I hope to hear from you soon. Thank you very much.